Channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me, if you don't mind. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. So please be careful. Don't get yourself scammed. If you want to keep up with me when I'm not on YouTube, do me a big favor. Get down to the description box. Click on that Richard Fain Millionaire Mentor Instagram link. Give me a follow on Instagram. I certainly would appreciate that. Also, make sure you give me a DM once you follow me so that I can say thank you. Also, let me know that you're rocking with me. Let me know that you got my back. Trying to get this Instagram page back up and where the old one left off. Trying to get it back to that 90,000 plus followers. We're a long ways off. We're a long ways off. We're about 84,000 followers off. But we're going to keep the effort going. I'm going to keep asking you guys every single day until I get myself back to 90,000 plus followers on Instagram. So hopefully you guys are okay with me asking you to give me a follow on Instagram. Like I said, down in the description box is the Richard Fain Millionaire Mentor Instagram link. So give me a follow if you would be so kind. I really would appreciate it. Also, go check out the website, www.richardfain.net. Second link down in the description box. Go check out the website. Go check out them digital products. If you're so inclined to, you want to make an investment in yourself, do me a big favor. Grab some of those digital products. I think they can change things in your financial life. But you have to believe that, and you have to want to change something in your financial life. But if you want to, you certainly can. You'll never be the same again. You go to my website, purchase them digital products, you'll never be the same again. You will never be the same again. So do me a favor, get over to the website, second link down in the description box, and check it out. While you're there, consider joining the private mentorship club, fastest growing financial community on Patreon, hands down. Fastest growing financial community on Patreon. So if you want to be a part of that community, almost 800 people in 3 months have already decided to become a part of that community. We'd love to have you. Hey, why don't you get yourself over there and check it out, right? Worst case scenario, you don't like it and ain't your cup of tea, you can always leave. But I believe if you give it a shot and you participate and you get into that community chat, you're going to catch that financial fire. It's financial fire over there, right? A lot of good energy over there. People are excited about building wealth, man. Join us. Come be a part of it. Also, last thing, and then we're going to jump into our topic of this evening, which is obviously Nvidia and the rest of the market. We're going to get a little recap of the rest of the market. Moomoo, my self-directed brokerage app that I'm going to be using over the next 10 years to 6x my net worth. I know a lot of y'all say, well, golly, this guy started out with double his net worth. Now he tripled the net worth. Now he's quadrupled the net worth. Now he's 6x. I believe that, guys. I'm sorry. I'm a big believer in me. I'm a big believer in the stock market. I'm a big believer in positive thinking, right? Why would I limit myself? I'm not going to limit myself. You shouldn't limit yourself, right? As long as you're willing to go after it and execute and do what you need to do, why limit yourself? I don't limit myself. I'm going to 6x mine. Y'all may limit you. I'm not going to limit myself. I'm not going to let these limiting beliefs take over my life. I'm not going to do it. I'm going to say what I believe I'm capable of, and I'm going to stick to it. And I'm going to continue to put the activity behind it. And I'm going to make sure I manifest it to a reality. And I'm going to get some help from Nvidia and some of Nvidia's friends. I'm going to get some help. They're going to help me a lot. So just, hey, man, don't limit yourself is what I'm trying to tell you. You know, believe in you. You can do anything you're capable of wanting to do. You can do it. So don't limit yourself. But yeah, get down to the description box, click on the Moomoo link. The good folks at Moomoo are going to give you up to 20 free stocks, publicly traded companies, if you decide to try out their brokerage app. I don't know why you wouldn't try it out since you're getting 20 free stocks and yours truly uses it. It's my primary brokerage account that I use. So if you're rocking with me, you're watching me every day or every other day or every once a week or whenever you watch me, you're watching me. You're trying to build wealth. That's the reason you're watching me. You want to kind of know what I'm doing. You want to know what my experiences are. If you're not sure what brokerage app to use and I'm using Moomoo, why not give it a shot? I'm the guy you're watching on YouTube, right? So get down in the description box and click on the Moomoo link. Open up the Moomoo account today, man. Go get that 20 free stocks. So here are the qualifiers for the free stock. If you put $100 in your new Moomoo brokerage account, they're going to give you 8 free stocks. If you put $1,000 in your Moomoo account, they're going to give you 20 free stocks, publicly traded companies. You have instant net worth gain. Instantly, your net worth goes up. Why? Because those companies that they're giving you have a value associated with their stock price. They got the stock has a stock price associated with it. Now, once you qualify to unlock the stocks, guess what? You can either keep those stocks and continue to watch them grow. You can add to them with the money you're going to be putting in your brokerage account, or you can sell them and put them in some other investment. That's up to you, right? You have the ability to be able to do that. So exercise it. It's on you. The goal, though, is get yourself involved in building wealth through paper assets, guys. No better time than right now. Get down in the description box, click on the Moomoo link, and get yourself started today. Go get that free stock, go get that free money. Also, if you're brand new at this and you don't know how to use these brokerage apps, send me an email through my website, www.richardfain.net. Second link down in the description box. Send me an email. I'm going to send you some tutorial videos that'll walk you through how to use the Moomoo brokerage app. So that way you can collapse time frames and get right to business, right? Plus, I'm going to send you my blueprints that's telling you everything that I'm investing in. It's called Wealth Transfer Blueprint 1.0, 2.0. I'm going to send you that, and that way you know what I'm investing in. So if you want to copy my plan, you can. I'm not a financial advisor. I'm not trying to be your financial advisor. I'm not trying to play a financial advisor on YouTube. I'm none of that stuff. I'm just a regular guy, just like you, just trying to build wealth. I'm just trying to change something in my financial life, and I'm doing it through paper assets. No guarantees. I'm willing to take on big risks to get big reward. I don't know. You got to figure that one out for yourself. I'm just letting you know I'm not a financial advisor, so I don't want nobody saying, oh, that guy on YouTube said he was. No, I'm not. Sorry. I got no letters behind my name or before my name. I got no numbers behind my name. I don't have a CFP. I don't have any of that stuff. But I built wealth anyways. Didn't have any of it, and built a lot of wealth over the last 30 years without having any of that stuff. Just very simple. Buy big boy blue chip, historically proven companies and ETFs and index funds, and just hold them long term. That was my strategy, and that's all I've done, and I've been very successful at it. So, all right, let's dive into the topic of the day. Before we dive into it, let's talk a little bit about where we came from this morning. Immediately when the market opened this morning, Nvidia did what? Took a nosedive. I mean, it started out at, what did it start out at? What was it this morning? Let me see what it was this morning when it started out. I want to say it started out like at 111, something like that this morning. I'm sorry, it started out at 113 this morning. 9:30, it started out at 113, but immediately within the hour, it was below 110. It got all the way down to 106, guys. $106 a share. That's what it got down to. So nevertheless, me seeing that, jumped all over it. Picked up me another 1,846 shares at 108. Ready to pull the trigger on another 1,000 shares, but I thought it would get itself down to 100 today. So I hesitated. I said, I'm already at 108. I don't care nothing about no 106. I need to be at 100 or below. That's where I wanted to be at on the last 1,000 shares that I'm going to buy this stock. That's it. That'll put me at 11,200 shares. That was it for me. That was it. I wasn't going to be buying any more after that. So yeah, so that's where I'm at right now. I'm holding on, trying to get myself in a position where we're going to do what we need to do to try to make this thing work. And so yeah, so it started out at 113, and then like I said, it tanked. So it ended up today. I think it closed at, I think it actually had a high today of about 116. So it did have a high today of about 116. Hopefully here, guys, I'm not having problems with this internet again. I'm hoping I'm not. Let's see what we got going on here. Because I'm looking at my screen over here and it looks like I'm having some problems here. I don't know if I'm actually having problems, but it looks like I'm having some problems here. Let's see. Let's see. Am I having problems here? All right, let me see here. Okay, I think I'm doing all right now. My apologies, man. Y'all know I got a raggedy internet, man. This internet around here raggedy as I don't know what, and I got to do something about it. But nevertheless, let's dive back into this thing. So yeah, it got all the way up to, about 116 today. So that was pretty dang on good, right? So the low today was 106. The high today was 116. Clearly the 116 was short-lived. It was once it started its ascent back up from 106, it actually settled around 114 for most of the afternoon. And then at some point, it must have jumped up to 116. I didn't see that, but clearly it says today's high was 116. So it settled itself back down. Right now, after hours, it's about 112.63. So needless to say, the day was all over the place, guys. I mean, it was all over the place, right? But I was able to, like I said, to pick up a good, like I said, 1,800 and almost 1,850 shares at 108. And like I said, I had another 1,000 shares ready to go. And I was waiting for it to go below or hit 100 or below. So that got me to thinking. I said, you know something? Let me get out here and figure out what these experts are saying about this stock and how low can it actually go? What's the low and what's the high? What are the experts saying? So I this afternoon before the live stream, I said, let me get out here and do a little bit of research. So that's what I decided to do, and I wanted to share these numbers with you guys. So let's go ahead and see if I can pull this up here. So now, here's the thing. When I looked at it, you had the high of $200 a share. When you look at it, it was about 46 analysts. And out of that 46 analysts, as you averaged them out, when you looked at the 46, you had a high of $200 a share. And then you had a low of $90 a share. The average price was about 142. That was the average price, 142. So I'm saying to myself, wow, $90 a share, is that possible? And I said, you know something, Richard, that's possible because if you look at this morning, I mean, this thing was down. And matter of fact, I don't think it touched on 105. I think the lowest it got this morning, I want to say was 106, at least from what I could see. I do recall someone in my private mentorship club saying that it got down to 105, but I didn't see that. My research says it got down to 106. So could it get down to 190 tomorrow? to $90 tomorrow. Because historically, when you have a bad run like we've had, Fridays are like the worst day. So could it potentially, tomorrow, Friday, July 26th, could it get down below $90 a share? Maybe. That's a possibility. Who would have thought? If somebody would have said to me 2 weeks ago that Nvidia would be trading at $106 a share, I would have laughed. I would have laughed. I'd have said, oh, that's crazy. I would have laughed. I would have laughed at him. But now, I ain't laughing. I mean, that's a possibility, guys. It is very likely that this stock could get itself down to $90 a share. I mean, very likely. I mean, very likely. And if it does, what are you going to do? What are you going to do if it gets itself down to $90 a share? Well, for me, that's pretty easy. I'm going to buy me some more of it. I'm going to take every resource I have and actually double down on it. Honestly. I mean, I'm going to literally take every resource I can and double down on it if it gets to that point. I'm not sure about what you're going to do because I believe there are some catalysts coming. I think you got the rest of the Magnificent Seven next week who are going to be coming out with their Q2 earnings next week. The last of the Magnificent Seven to give their Q2 earnings is Nvidia. So I think this thing is setting itself up perfectly, guys. I think this stock price is setting itself up perfectly. I think it's going to be a perfect setup. So if the stock does drive down to $90 a share or below tomorrow, which is a possibility, look what it did today. Look what it did today. Like I said, 2 weeks ago, nobody could have told me this thing would have ran itself down to $106 a share, but it did. So it also goes to show you how powerful hedge funds are, institutional investors are, mainly hedge funds. Because the hedge funds are the folks that are really shorting this stock. And it shows you how they control, these market makers, they control the stock market. Because they're the ones that's driving down the price, right? Hedge funds. They're shorting the stock. Right? So they're trying to cover their short positions. They're shorting the stock. They're trying to drive it down as far as they can drive it down. Now, these will be the same guys that'll be buying it on the way up. They'll cause the reversal. Same ones. Same people who are causing the stock to go down will be the same folks that will cause the stock to go back up. That's called market manipulation. That's what that is. And let's not fool ourselves. There's plenty of market manipulation in our continuous bull market, AKA stock market. Continuous. There is a lot of market manipulation. Now, there's also where companies just do bad, right? You know, you don't need market manipulation when you do bad as a company, but we don't have that. And I explained that to you guys earlier today when we talked about a little bit about Google. What was wrong with Google's earnings? What caused Google to go down 5%? There was really nothing wrong with their earnings. They actually had pretty good earnings for Q2. Right? So market manipulation. What's the problem with Nvidia? Somebody tell me, please. Well, you can't tell me because I ain't got the chat on, but what is the problem right now with Nvidia that would cause their stock price to go from what, a month ago? What was that? June 10th, they split 10-1. about a month ago, the stock was at 140. It hit 140 a month ago. What's different now than a month ago when it was 140 and it got itself down to 106 today? What's the difference? What is it, a different company? Or is it the same company? I say it's the same company. I just think it's market manipulation. Like I said, you got hedge funds. They are shorting the stock. They're forcing it down. They're doing everything in their power. Geopolitical reasons. They're gonna have problems because the United States doesn't want them to sell certain product to China. Okay, they resolved that. Now they're coming out with a product just for China that meets all the restrictions here in America that America wants its companies to meet before they sell off technology. They're coming out with something that meets in all those requirements. So now what? You see what I'm saying? So again, guys, we got to understand the powers that are playing in this stock market game. Billions and trillions of dollars are at stake. And of course, they attack a company like Nvidia from a short position standpoint. But at some point, they got to let it go. And they're going to have to let it go when these earnings come out, because I believe the earnings are going to be substantial. Now, here's one thing we're going to have to understand about the earnings. And this is one thing you got to understand how, the stock market and some of these major players manipulate the system, manipulate the market. So you got these experts, right? Here's what they try to do. Now they know Nvidia is going to have good numbers, but what they'll try to do is set the expectation so high above what a normal company would do. They're going to set the bar real high. So even if Nvidia comes out and has 110% year over year in revenue, they might say, no, we wanted 150%. Now, tell me where in America a company that does 100% year over year in revenue growth is not good. This is what I'm trying to tell you. So, but the market might say, well, shoot, based on what they did in the past, we want them to be 150%. What? 100% year over year in revenue growth is not good enough. So you got to watch out for that too. I know for the last 4 quarters, Nvidia has come out with forward guidance, letting people know what they expect the numbers to be, and they've been conservative. If you go look at what they've said they were going to do and what they actually did, blew it out the water, what they actually did compared to what they thought they would do. So if that holds up, we're going to be okay. We're going to be okay. But in the short term, can the stock go down to $90 a share? There's a possibility. And like I said, there are experts who believe that's a possibility, right? So we have to pay attention to that, right? We have to pay attention to the possibility that could happen just based on this morning. I just would have never thought that 2 weeks ago, but it happened. The stock price went down to 106. And I thought for a minute there, it was going to go down under 100. I'm not going to lie to you. I thought it was going to go down to under 100. Now, am I concerned or am I worried about that? No, I'm not. I'm not concerned about that. I'm not worried about that. I still think this company has the upside potential to get to $200 a share this year. Think about it now. When this company runs, guys, just think about the past 2 years. When it runs, there's no stopping it. And when it runs in chunks. It ain't like it goes from $106 to 108 to 110. No. When it runs in chunks. So it wouldn't surprise me. It would not surprise me by the end of August if it's not trading at $150 a share. It wouldn't surprise me when the Q2 numbers come out. Matter of fact, it wouldn't surprise me if next week when Apple, Microsoft, Amazon, I think it's Apple, Microsoft, Amazon, and Meta. Apple, Amazon, Microsoft, and Meta report next week. You already had Google and Tesla report. So you got 4 more of the Magnificent 7 mega cap tech companies that report next week. That's a big week. Because if we can get some of those, hopefully all of them, if all of them can do better than expected, we got a run on our hands. I'm talking about upward run. And then if we come back with Nvidia on August 28th, and they seal the deal by giving above expectations, then we're off to the races. Also, what you got to understand is we got a report today about GDP. And how does GDP affect what's going on with us as investors? Well, you know, the Fed has been trying to stick a soft landing. Basically, what that means is they want to be able to bring inflation down through high interest rates, bring inflation down to 2%, but also keep the economy growing at the same time. So they want to bring inflation down to 2%, but they don't want to stall the economy. They want that to continue doing well. We got good news today because it looks as though for the first half of the year, or when you annualize it, we're looking at about 2.5 to 2.8% GDP. That's good news. And that's one of the reasons why you saw Nvidia and others take a little bit of a bounce today. See, we started off bad, but then that news came out of this positive GDP, which says the Fed has a really good chance of sticking a soft landing, right? Boom. You see instantly we had a little bit of an uptick. And for a few hours out of the day. I mean, it didn't last, but we got that uptick because of that positive report. So GDP is doing well based on that report. Inflation is coming down based on the last 3 CPI inflation reports and PCE reports. So that's good. Economy is still doing okay. People still spending money. And I think what really sparked it was businesses are starting to get going again. Even though interest rates are high, they're starting to put money into growth again. Where are they getting it from? I don't know, but they're putting money into growth again. So people are spending, companies are spending. GDP in the second quarter did much better than it did in the first quarter. The first quarter was about 1.4%, not well. Second quarter was better. So now you got an annualized GDP of about 2.8. Not bad. So that helps because now the Fed can say, all right, we've done our work here. We've kept rates higher for longer. We've accomplished a soft landing. Now it's time for us to systematically start bringing these rates down. You know, let's stop we won't be so restrictive. Let's bring them down. And I saw one of the former Fed chairs even went on record to say the Fed could make a case to bring rates down next week when they meet. You do know they're going to be meeting, I believe, Tuesday and Wednesday next week. This will be their July meeting. The former Fed chair made a case that the Fed could actually reduce rates in July. Now, that doesn't mean it's going to happen, guys. I'm just saying he was making a case like, listen, they could actually reduce rates in July, and it would be fine. Now, the consensus is they'll reduce in September. But do you understand the catalysts that are coming though? Number one, if we get positive guidance from the Fed next week when they meet, if the Fed likes all the reports that they've seen, they like the growth in the economy, they may give some forward guidance that says, hey, things are doing well, we can see rate cuts in the future. Just any type of guidance that continues to back up rate cuts in September, November, December. Also a catalyst next week is the big four, right? Apple, Microsoft, Amazon, and Meta coming out with Q2 numbers. So that's another catalyst for next week to kind of get this thing, really what we're trying to get going is mega cap. We're trying to get tech going again. If we can start getting that going, and I'm telling you, you can't stop it if those four come out next week with above expectations on their earnings report. We can't, even the hedge funds can't stop that. They can't stop it. Even the hedge funds can't stop that. But we need help from those four. We need positive guidance from the Fed next week. Good guidance from them, forward guidance from them. You know, we need a dovish posture from them next week. We need the four big tech companies to do well next week with earnings. And then obviously followed up by Nvidia knocking this thing out of the park on August 28th. I think going into September, you could have a $150 share price. And then on that last quarter, who knows what could happen, right? By that time, hopefully, you can already also see, guys, when you go look at you go study a little bit, you can start seeing the money that's short in this stock is starting to go down. It's starting to go down, not grow. It's starting to go down, right? So when it was $35 billion, you kind of knew at some point the stock would come down. Nobody knew how far it would go down, but you kind of knew with $35 billion in short positions, this wasn't just mom and pop investors trying to short the stock. No, these were hedge funds. These were big boy hedge funds. That's who is behind this whole thing. They're behind the whole thing. And these will be the same hedge funds that'll run the stock back up. That's what you got to be careful with, right? So for me, knowing that the hedge funds are responsible for driving the stock down, I also know the hedge funds will be responsible for driving it back up. So for me, if it gets down to $90 a share, what a perfect opportunity to build wealth. Because remember, we build wealth in the red, right? And we collect wealth in the green, right? We collect it. We build it here, we take it in the green, right? So I think hedge funds, billionaires, they want the cake and eat it too. And in most instances, they get that. But I think though, if it is under pressure in the morning, the stock, if it's under pressure in the morning, it could drop below 100. Could get down to 90. Who knows? Who knows? I'm not saying it will. I'm just telling you. But understand my posture. The lower it goes, the better for me, honestly. Because that's just more opportunity I have to buy at a heavy discount when I believe still, and I know I may be one of the few people believe this, but I think it still can be a $200 per share stock by the end of the year. Because I know this stock can jump $100 a share just like that. Just like that. It can go up $100 a share, $50 in one day a share, 35 in one day, 65 in one day, just like that. So I'm still optimistic that we can get to a $200 price. I think you got out of those 46 analysts I mentioned, the average they're thinking is 142, 143. But even at that price, guys, think about it. If you've been buying at 120, 125, 115, whatever in that area, you still got a real nice gain. I still think by the end of the year, if we can continue having tailwinds like the Fed reducing rates, like not all this geopolitical talk has been put to rest, I think we'll be fine. And if we can get the hedge fund folks back into actually looking to increase the stock price, because you need their help too, because they control the stock market, let's face it. The good news is these people want to make money. So as long as you know that, you understand that, you can make money too. At the end of the day, they want to make money. They just want to make it on both sides. They want to make it short in the stock, and then they want it through appreciation of the stock. They just want it on both sides. I don't know what else to tell you. You just have to know that, and that's part of this game. Like I said, if you know the rules to this financial game in this country, you can play. That's part of the rules. That's part of the rules. I don't make the rules. I just play by the rules and build my wealth anyways, right? So that's something right there that we got to be thinking about. What will this thing do tomorrow? And I just want to tell the folks that have been buying this thing at 125, you've been buying it at 130, and all of a sudden you're starting to see this deceleration. My opinion is don't panic. Don't panic. You're not in my opinion, again, I'm just an opinion guy. I'm not an expert. I'm not trying to give financial advice or any of that stuff. But in my opinion, you're okay. As long as there is nothing materially wrong with the company, as long as the company has not done something that's in their control to stay profitable and stay growing, we're fine. And right now, there is no signs of that. None. There is no signs of that. On Monday, July 29th, Jensen Huang, CEO of Nvidia, and Mark Zuckerberg of Meta Platforms, or whatever, Facebook, those two are going to be at some big meeting, big tech meeting, and they're supposed to be on the same stage talking. And there is some, people out there believe that these two companies could form some type of partnership. I'm just telling you guys, that kind of stuff right there will send this thing crazy. Remember, a lot of the stock market is fueled by enthusiasm and FOMO. A large part of it is driven by someone's need to not want to miss out, right? It's driven by people who believe I can multiply my money in my sleep by hitching my wagon to these great companies. And if you got two of the great companies deciding to do some type of collab or some type of partnership, and I don't know if that'll happen, I'm just telling you what some of the speculation is, that could run this thing up to 150 in a split second. I mean, just run it to 150 just like that. FOMO can do that. Optimism can do that, especially when you got great companies. There's nothing financially wrong with the company. And matter of fact, a collaboration or a partnership could benefit both companies. It could benefit the shareholders. From that standpoint, guys, that might be a good thing. That might be a catalyst. So that's coming up on Monday, July 29th. So that's coming the beginning of next week. And then we got to look forward to the earnings reports from the big four. We also got the Fed meeting. So we got a lot of stuff, a lot of stuff coming next week that could certainly change the dynamics around this company's stock price and the rest of the AI and the rest of the tech. If them four companies come out with above expectations, guys, changes the game. It changes the game. So we'll see. We're going to keep our eye on it. I'm going to keep my eye on it next week. I'm gonna keep my eye on this stock tomorrow, just to see how it starts off tomorrow, and be prepared to execute if it gets to a price where I believe it warrants me to execute. Again, I'm not going to execute at 114, 113. I'm not going to execute at that because I've already done that, right? My lowest execution right now is 108. So if I'm going to execute, it needs to be below 108. Because honestly, I've already got my 10,000 shares, and that was my goal. Matter of fact, right now I got 10,200 shares. But if it can get itself down to 100 or below 100, and I can throw another 1,000 shares at it, or maybe even another 1,500 to 2,000 shares if it gets below 100. If it gets down to 90, guys, I'm gonna probably grab another 2,000 to 2,500 shares if it gets to 90. And then add that to get myself close to 13,000 shares of this stock. And I'm all in, but I'm okay with that. Because I believe in this company. I believe what it's getting ready to do is gonna be something amazing. It's going to be something amazing, and I want to be a part of it. I'm excited about next week. I'm excited about the conversation between Jensen Huang and Mark Zuckerberg on whatever stage they're going to be on. If I'm able to, and I can find it online, I'm going to certainly watch. I'm excited about Microsoft, Apple, Amazon, and Meta coming out with Q2 numbers. Last quarter, Meta killed, but they still sunk because they had some crazy stuff going on. But nevertheless, I'm excited about the Fed meeting next week, because I think if we can get some positive rate cut discussion from them, I think that's good. I think they've already stuck the soft landing, in my opinion. They got inflation coming down to 2%. They got the economy still doing great. It's not in a recession. So I think they've stuck the soft landing, in my opinion. Y'all might disagree, but I think we're experiencing the soft landing right now. The next thing to do is start gradually bringing down rates, just gradually bringing them down 25 basis points a piece until we get to a lower policy restriction, and then let it sit there for a little bit. And then in 2025, continue to bring it down until we get to a level that we're comfortable with. Typically, that can be anywhere from like 2.5% to 3% Fed funds rate, somewhere in that neighborhood. 2 to 3% Fed funds rate would be sort of where we want to be as a neutral. And then, of course, if we get into trouble, they can always take it to zero. I don't think they need to take it to zero right now, but I do think they need, over the next couple of years, get it between 2 and 3%. That's neutral. And as long as the economy does more than 2%, as long as inflation stays below 2%, that's neutral territory. That's where we're performing at our best from an economic standpoint in this country. So hopefully that's where we're headed. I think the Fed has done a great job with interest rates. That's just my opinion. Others may disagree, but I think they've done an adequate job. I'm happy with where we're at right now. I'm also excited that I've been able to pick up this stock and other stocks at a discount, especially when I know there's nothing wrong with the companies, nothing wrong with the ETFs. You're just picking them up I looked at FTEC, my information technology ETF that I buy. It's 165. That's a bargain, man. I think you had SPLG. I don't want to say it was under $60 a share, but it was close. So that was on sale. So everything's on sale, man. Just market behavior, right? Tech led the charge first half of the year. Now they have a period of correction, consolidation, but I think they picked back up in August, September, October, November, December. We're going to finish this thing strong. I think Nvidia gets anywhere between $185 a share to $200 a share by the end of the year. Either way, great year. Great increase in net worth by being disciplined, understanding the dip, understanding that's where the wealth is built. And then obviously at the end of the year, have an opportunity to say, okay, I built this wealth. What do I want to do with it? Do I want to roll it over into 2026? Or do I want to take my profits, scale back the shares a little bit, take some profits, and then go in a little bit lighter you can do whatever you want to do. It's your wealth, right? You can treat it how you want to treat it. But understand the psychology of the stock market, understand who's doing the manipulation, understand that it is manipulation, but that's okay. Long as you and I can make money, I don't mind the manipulation because I know I can't control that. It's a lot of money at stake. There are a lot of hedge funds who benefit from the stock price going down. They said, listen, we let y'all run for the first half of the year. You should have made a bunch of money. We're going to make some now, and then we'll let this thing go, and we'll make some more on the way back up towards the back half of the year. That's just the way it works. And as long as you know that and you can get comfortable with that, you'll be okay. Personally, I'm okay with that, right? So that's where we're at on Nvidia. Could it get down to that 90? Yeah. Will it get down to 90? Who knows? I don't know if it will get down to that or not. I'm going to be watching it like a hawk. Right now, it's 112.28 after hours. So I have no idea what it will do. But I know if it does anything, it's all market manipulation. It's all market behavior. It has nothing to do with the company. So I don't really pay it any attention other than how low can it go so I can pick up these shares, right? That's pretty much it. How low can it go so I can pick up these shares? So what comes next for Nvidia? Nvidia stock has been volatile trading lately, and it sits 15% below the valuation high that it reached in June. The company's share price is still up roughly 133% year to date, and signs point to demand for its hardware and services remaining quite strong. With Apple, Microsoft, Amazon, and Meta all scheduled to report quarterly results over the next week, there's a good chance that Nvidia stock will see some significant movements in conjunction with the quality of big tech earnings. Finally, Nvidia will be the last member of the Magnificent Seven to report quarterly results this earnings season and is scheduled to publish its results after the market closes on August 28. Nvidia's last update guided for revenue of roughly $28 billion. So that's what the guidance is. Nvidia has said this is what we expect in Q2 in revenue, $28 billion. So that's the number the market basic is going to look for. So Nvidia's last update guided for revenue of roughly $28 billion in the quarter, good for growth of 107% year over year. 107% year over year if they come in at the 28 billion for the quarter. Good for growth of 107 year over year, but the company has been crushing its own guidance lately, and Wall Street will likely be expecting a substantial sales beat. That's what I was talking to earlier. How in the world you can come in 107% year over year, but they want you 150. And if you don't come into 150, they try to spin it off like it's bad news. It's stupid. It's stupid. But this is the game we're in. These are the rules to the game, right? Good news is, lately, Nvidia has been doing way better than their guidance. Their actual numbers are better than the guidance. So that's what we got to hang our hats on. That's what we got to hang our hats on, right? The AI leader's upcoming quarterly report looks poised to be the most influential stock event this earnings season. And that's true. I keep telling you, wherever they go, the rest of the stock market goes short term, right? Short term. So that's where we're at. The major indexes today, guys, S&P declined 0.51% to finish out 53.99.22, guys. A couple weeks ago, it was 56.69. Now it's down to 53.99. NASDAQ dropped 0.93 to settle at 17,181.72. The Russell 2000, which is small caps, gained 126 today. The Dow gained about 81.20. So that's it, man. You know, investors ditched tech for a second day straight. We know that. Advanced micro devices lost 4% today. Van Erck Semiconductor sold off nearly 2% again. Meta fell 1.7. Microsoft 2.5. Alphabet 3. So Alphabet 5 the other day, another 3 today. See where I'm going with this, guys? These are all opportunities, man. This ain't nothing wrong with these companies. Y'all know that. I mean, I know I keep saying that, but I'm just trying to make sure you understand it ain't nothing against the companies. It's all because of rotation out and big investors doing different things with the money right now. But I still believe that will turn itself around. It will turn itself around. What we got to do is stay diligent, stay disciplined, stay consistent, stay patient, and just wait for this thing to right size itself, because we know it will. Now, we don't know the specific date, but we know eventually it will. We know there are so many catalysts coming over the next month. I mean, in 1 month from now, we could be looking at a stock price of $150 a share. Just like that. So that's where, once we get that momentum going again and it hits that second level, then we know we're not going back down to 105 or 106 or whatever it is. Once we hit the next level. See, when we started at the split at 120, we actually got ourselves up to 140, but that's when the rejection started. And then from there, we haven't been back there since because the market rejected us. And then, of course, we had the $35 billion worth of short plays. So we knew at some point with that type of activity on short, you knew eventually the stock had to go down with that type of activity. Because it's not $35 billion like that for nothing, guys. That's a significant amount of money. So there are significant players who had a lot of reasons for that stock to come down. Therefore, you start all the geopolitical talk. Therefore, you start all the talk about, Taiwan and, just all kind of stuff. Just stuff comes out of thin air that we hadn't really even talked about before, but all of a sudden it's front and center because they had to do something to start a negative campaign against the stocks. And they couldn't just do one, which is Nvidia. They had to attack the whole tech sector so it didn't look stupid. Come on, you gotta just know what these people are doing. They didn't attack, because there's no reason why Google should be down 8%. Come on, look at the Q2 numbers. There's no reason it should be down 8%. Not when you beat on revenue and net profit. Net profit, come on, it shouldn't be down 8%, but it is. It is. So it's an orchestrated attack on tech just to isolate one company, which is Nvidia. That's basically what it is. It's an attack on the overall tech just to isolate Nvidia stock. And that's what they've done. And they've been successful. Now, the question is when will you can already see the tide turning because you can look at the short positions, it's dwindling. It's getting less and less, right? So it's winding itself down, and then all of a sudden, there'll be the same folks that throw it back upward. And that's where you and I come in. So Van Erck Semiconductor sold off 2%. I mentioned that. There's a changing of the guard happening on Wall Street. The AI stocks that led on the way up are now leading on the way down. Investors added that these movements are not uncommon during a bull market, a great mini rotation. During bull markets, you see one sector lead, then it pauses, corrects, and passes the baton, he said. Think of it like a relay race over to another sector. Investors also assessed a second quarter GDP report that showed that the economy grew 2.8%, much more than expected. Economists surveyed by Dow Jones had anticipated growth of 2.1. Wall Street came off a losing session with the S&P. We already talked about that. Investors have come to view the recent declines as a sign of overdue correction in an overbought market. We talked about that. We also talked about Ford this morning. They are up to a 18.4% decline in the stock price. That would be Ford Motor Company. If you believe in American cars and you're a big fan of American cars, you know, 100 and something year old company, you got an 18.4% discount. Might be something to put on the short list. It's a great American company. Might be something to put on the short list, right? So there you go, man. Edwards Life Sciences shed 31% for its worst day since 2000. This is Edwards Life Sciences. There's another one for someone to research, perhaps put on the short list. It's discounted by 31% today. The question is, can it recover? And that's where the homework comes in, right? That's where your homework comes in. So there you go, man. You got a couple of short list stocks. Ford Motor Company, 18% discount. And then you got this Edwards Life Sciences, 31% discount. Two companies that potentially trade lower today, may be back trading higher in the next few weeks, the next few months, the next year. Who knows? But certainly something that you may want to put on the short list and put some eyeballs on if you're looking for a quick come up. Could be, may not be, but could be, right? So there we go, guys. Like I said, the Fed is going to be meeting next week, Wednesday and Thursday next week. That's the Fed meeting. So be on the lookout for that. And like I said, be on the lookout for the 4 big boys that'll be reporting, I think, sometime next week. I don't know if all of them will be next week, but they're coming. Those 4 are coming. They're scheduled to report before Nvidia. So they're coming. And I believe they're all next week or over the next couple of weeks. But you can go ahead and get the details on that. Just know that they're coming. And if we get good news out of them, that helps our bottom line on all of our S&P 500 ETFs, information technology ETFs, all of our tech, Magnificent 7 companies, and obviously Nvidia. So it helps us all the way around if we can get some good news from those 4 giant companies as it relates to earnings results. It helps if we can get some good news out of the Federal Reserve, giving some guidance on when they're going to reduce these rates. Well, appreciate y'all, man, for rocking with me. Hopefully, you got something out of this. Like I said, if you'll do me a big favor, get down to the description box. If you want to take advantage of that Moomoo brokerage app, that Moomoo brokerage account offer, which is up to 20 free big boy blue chip. Well, let's not say big boy blue chip. Let's just say 20 publicly traded companies. Let's wind that back, because I don't know for a fact they go be big boy blue chip now. But I do know they're publicly traded companies. Let's not, let's not embellish it. Let's just keep it at publicly traded companies, right? You're going to get up to 20 of them if you decide to try out the Moomoo brokerage app. That link is in the description box. First link. If you try it out, you put $1,000 when you initially open your account, you get 20 free stocks. If you put $100 when you initially open your account, you get 8 free stocks. Also, all you got to do is send me an email through my website, which is the second link down in the description box, www.richardfain.net. Send me an email, let me know you've opened the Moomoo account and you funded it. I will go ahead also and send you some tutorial videos to walk you through how to use the brokerage app. So without a problem, I'll send you that. And then I'll also send a couple of videos outlining all the investments that I'm buying, just in case you're brand new and you want to copy my plan. Again, I'm not a financial advisor, so I can't tell you what to buy. I can't tell you when to sell. I can't tell you any of that stuff. But what I can do, though, is tell you what I'm doing. And then if you like my plan, copy it. Nothing wrong with that. So I'll send you those 2 videos too, the Wealth Transfer Blueprint 1.0, 2.0, and I'll send you the tutorial videos that help you learn how to use the Moo Brokerage app. Couple nice features I like about the Moo Brokerage app is fractional share trading. And fractional share trading is basically, I don't have to have $106 or $115 a share or $112 a share to buy one Nvidia stock. What if I only got 75 bucks and I want to buy a part of Nvidia stock? I can buy a fractional share of it for 75 bucks. I can buy a fractional share of it with 30 bucks, right? And then I can build myself up to a full share. That's fractional share trading, and you can do that on the Moo Brokerage app platform. Also, what I like is what they call DRIP, which is Dividend Reinvestment Program, right? Where the Moo app and the folks at Moo will automatically take the dividends that you get from individual stocks and ETFs, and they will automatically reinvest them back into buying more shares of whatever company the dividend came from. And that's DRIP, right? Dividend Reinvestment Program. So that's another nice feature of the app. The third feature that I really like is what they call Automatic Investing Program, or AIP, right? AIP is basically where you go into the app and you can set up to buy an investment, a reoccurring purchase of that investment every week, every month. You build it into the app, and as long as you got money in your brokerage account, it will automatically on a certain day, whatever you choose, take that money and invest it for you. That way, if you're somebody that's busy and you don't have a lot of time to be trying to remember, I want to take this $100 and put it in Nvidia, or I want to take this $100 and put it in Apple every week or every month, but I don't want to have to do that myself. You can put it to the app, and they'll do it for you. So that's another nice feature. So you got 3 nice features. You got fractional share trading, you got DRIP, Dividend Reinvestment Program, that can be automatic, and then you got Automatic Investment Program, where you can set up any ETF, any individual stock that you want to invest in. As long as you got money in that brokerage account, it will automatically take it out, automatically invest it for you, and take the manual work out of it for you, right? So listen, man, if you want to try that out, like I said, get down in the description box, click on the Moo link, open up the Moo account today, get you up to 20 free stocks, send me an email. I'm going to send you some training material. I'm going to send you my Wealth Transfer Blueprint 1.0, 2.0. You're going to get those fantastic 3 magnificent features I talked about, plus a whole bunch of stuff, guys. You also get 5.1% APY, plus for 3 months, you get another 3% booster. So the money that you sit in your cash account before you invest it, while you're waiting on the right investment, you can be earning some interest on that money that's sitting in the cash account. That's another nice benefit as well. So just check that out. When you hit the link, you can read more about the 5.1% plus the 3-month extra 3% booster that'll get you up to 8.1% APY. You can read more about that and how to get set up in that program if you want to take advantage of it. A lot of stuff to take advantage of, guys, with the Moo app. It's just not a regular, it's filled with a lot of great features and some benefits, especially on the training side or the educational side or the learning side. They got all of these videos and these courses in there that you can, let's say you were somebody that wants to learn how to do options trading. Now, y'all know I don't do that, and I'm never going to want to do that. That's just not my thing. But that don't mean you can't go inside the app and learn through tutorials, and maybe you give it a try. I don't know. I'm just saying it's there for you if you want that option, is what I'm saying. So make sure you go check that out down in the description box. Click on the Moo link. Get yourself up to 20 free stocks. When you sign up today, go get that free stock, go get that free money. Well, guys, lock it in with a thumbs up before you get out of here. I appreciate y'all for rocking with me on this Thursday evening. Hopefully my internet held up. It's raggedy, but hopefully it held up. It looks like it did on my little computer here. So I'm gonna see you guys tomorrow, 10:30 a.m. Eastern time. Like I said, lock it in with a thumbs up before you get out of here. Hopefully the information was helpful, and it will help get you one step closer to your pot of gold at the end of the rainbow. Thoughts become things. See it in your mind, hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, and I'll catch you guys on the next one.